traders. Welcome to Wednesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news so that we know what's going on and when it's going on, so we're not taken by surprise by anything. So first off, looking at the news calendar, it's relatively light. We've got some small news announcements at 7 o'clock, mortgage refinance stuff. Not a big deal. 8:15 is the big one. That's the ADP non-farm employment change. The forecast is 88,000. The previous was 307,000, so some pretty big differences there. 9:45, we've got the market composite PMI. Medium news announcement, not a huge one. We also have services PMI at 9:45 for December. 10 o'clock, with factory orders for November. The medium news announcement, and then at 10:30, obviously today's Wednesday, pretty big day for crude. Crude oil inventories at 10:30, forecast is negative 2.133 million. Previous was negative 6.06. Going through the rest of the day, FOMC meeting minutes later today at 1400, and that's really about it. Now, as far as crude oil inventories, there are two numbers that you want to keep track of. You've got the crude oil inventories, which has a forecast number for Wednesday. That's negative 2.133. But you also want to go back to yesterday and look and see what the API was. What the API is a really, really good precursor to as to what to expect. So the fact that the API came out at a negative 1.6, chances are that going into today is expecting that negative 1. What was it? As I try to click through all these ads, negative 2.133 million. So given that they're forecasting right around the same area, probably going to be a negative number. And if it's not, that's where you can judge a market surprise and kind of use that information to your advantage. That's about it, though. So there's not really a whole lot of news other than that. So now we can jump in. So let's take a look at the charts for today. Today being 1/6 of 2021. First up, we've got the NASDAQ, which is very, very sideways in the bigger picture. Now, I say in the bigger picture because obviously if we zoom out a little bit, it looks pretty bearish. But realistically, from that drop, we haven't really gone anywhere. It's kind of gone up inside of that area. It held perfectly off that L4, rejected back down, and now from there they're holding an L1, and this is the zone of resistance, L1 to L2, to see a continuation back down again. If that begins to fail, that would potentially spark a huge trap, which would be a broken L1, looking for potentially price to reverse back the other direction. It's a lot of things that can change when it's reversing back up like that. So the obvious anticipation is to see the market continue back to the downside for this morning and potentially see this keep pushing. That said, there are a few caveats. We're starting to see the stochastic get a little bit neutral while the market's making these lows. It's starting to show some signs of weakness. That might just be because they were fighting all the way down to finally make that low, but that is a potential concern. If the sellers can't get the job here finished, then that's where that big giant reversal all the way back to the top comes in. And then to add to the confusion, we've got the S&P, which hasn't really decided which way it wants to go at all. Still inside of that big drop from January 4th, and hasn't moved up or down or anywhere. It's just price is still stuck inside. So while the market is stuck inside between these zones, it's a buy low, sell high, stay out of the middle kind of market. It's a range. So given where we are, it's smack in the middle of the range. This seems like a great place to not trade. Looking for, maybe some potential breaks or something to allow anything really. We've got a nice little wedge that they're trying to get, a break back up into this resistance zone, 3730s, and then a rejection back down from there, or a wedge break down to the lows and then a bounce back up. We just got to get away from the middle. This is a real problem spot. And then there's gold. And over on gold, we have still that open gap, which is still hanging out down there. But one of the big things, notably, that we have going on is this really, really strong rally to the upside, and it starts rounding off the highs. And a lot of times when you get this really shallow pullback, just sideways price action in the overall picture, but it has a slight angle to it. You're dealing with more likely a spike in channel that is nearing its completion, given the fact that we're seeing the strongest leg at this late in the trend. The strongest leg should be over here at the beginning of the trend, right? Those are the things that kick things off. Now, it's not to say that this can't kick off a big move to the upside. It certainly could. But that's not the probability. The probability is that we see buyers getting out of the way up here, taking profit, assuming that it's not going to be the case, but still trying to hold on. You know, maybe if they've got a multiple contract position or something, try to hold on for a just in case blow off on the highs. But realistically, a lot of people are getting out of the way up here, and it wouldn't be a surprise at all to see this want to pull back a lot deeper. That's what you see in a spike in channel. You've got the spike into the channel. Now it wants to pull back to the base point, and we're rejecting the highs. I think it's doing that for a reason. Crude oil showing some fantastic continuation to the upside with a gargantuan reversal, just unbelievable bounce in the 48s. And as soon as it bounced in that $48 range, it went screaming higher. And ever since then, it's just been holding L1s the whole way through. This amount of bullish strength is likely to see some divergence up here. That's expected, right? We've got MACDs pushing lower while prices pushing higher. That's profit taking. Who's not going to be taking profit in a move like this, you know? Especially noticing where we're hitting. We're coming into that $50 mark. You remember how difficult $50 has been. That was also a huge objective. There's a lot of gaps that are getting filled in this 50 to 52, 53 range. So this whole zone might be the next branch area where we kind of get stuck. And well, you know, from 50 to 53, it's only trading at around 50-40. We've got a couple more dollars to go to the upside. I think the bulls are still very, very safe. But where it is now, way the heck up here, I can't imagine a lot of buyers are going to be too interested in buying up here unless they feel like they're missing the move. If we can get another FOMO squeeze like we had over here, then sure, we might be able to squeeze this up towards the 52s, 53s and finish the job all in one day. The euro continues to scream to the upside, holding that previous level of support we talked about yesterday on L4. Fantastic bouncing on L4. Couldn't even make it to L5 before screaming all the way back up to a new high. Now that the market's made a new high, it's fairly obvious that we've got a lot of support resistance here. This was resistance. Now I'm looking to see it turn into support and see what they do here at the 23,275s. That's also a major zone pullback after finally a rally to a new high. And if we look back on this, it wasn't actually at a new high. So this last poke that we had here, that was kind of that first real pullback that we had after breaching that top. And it was aggressively snapped higher. So it seems like buyers are relatively aggressive, and a nice shallow little pullback might be all it takes to refuel them back up. And then finally over on Bitcoin with an ascending wedge that attempted to break out of the highs and failed. That's not a very good sign. It's not that it can't continue, but there's a lot of problems with this. When we have an ascending wedge that's breaking higher, that takes a lot of money. You have a bull signal breaking through the top. That takes a lot to sustain, right? That's not easy. It's a lot easier to reverse out of a bear trend than it is to get a bull trend to break even more aggressively bullish. So when we're looking at the context here, it tried breaking higher above a bull pattern and failed. That doesn't mean that the bulls are giving up. That just means that nobody wanted to buy that aggressively at the top. Chances are they want to buy a pullback instead. So that last pop higher is more likely, given the context, a stop run that took out a bunch of stops on shorts, or potentially longs who were trying to get the breakout above the highs. They're now getting stopped out. And this is where buyers are going to begin accumulating because, well, people are getting stopped out. What better place? If you look in the MACD is displaying a negative divergence on the highs. And with a failed break above the top, it would make a lot of sense to see a break back to the downside, making that 32,500 to 33,000 area very, very juicy. That's the big zone of interest for now on Bitcoin to see if it wants to pull back and overcorrect the over blow off on the top. All right, well, that's going to do it for today. Like we always say, stay safe out there. keep those stops in play and let the winners run. Until next time, have a great one. We'll see you all then. Thanks.